Broadcasting live from the Business RadioX studios in Tampa, Florida. It's time for Tampa Business Radio. Now, here are your Business RadioX hosts.
Lee Cantor here, another episode of Tampa Business Radio, and this is going to be a good one. Today on the show, we have Michael Berkhahn with Graham Capital Wealth. Welcome.
Thank you for having me, Lee.
I am so excited to learn what you're up to. Tell us about Graham Capital. How are you serving folks?
Yeah, so here at Graham Capital Wealth Management, we are an independent registered investment advisory firm that really focuses on retirement planning. As our clients, fiduciary, we try to make prudent investment decisions on their behalf. I think the one thing that really makes us unique here in the Tampa area is just more of our active management approach. What I would want listeners to not think of when I say active is that we're not day traders, but we really, try to, personalize each of our clients' portfolios by, individually purchasing stocks or bonds rather than, utilizing, predetermined models or funds, just because, there's added cost to that, handing it off to a third party money manager or, purchasing ETFs and mutual funds. We believe that cost should be, in our clients' pockets versus, paying those additional expense ratios and things like that.
Now, are your clients typically, coming from corporate background? Are they entrepreneurs? Are they athletes? Are they celebrities? Like, what does that ideal client look like for you guys?
Yeah, for us, I think we have a pretty wide breadth of clients. I mean, we have, former CEOs of publicly traded pharmaceutical companies, as a client. We have, former board members of energy companies. And we have, clients that are just kind of starting out their first Roth IRA. So, I think we have a pretty wide breadth of clients that we've been able to, assist with, with their financial plans.
So is there a minimum to get started, a minimum amount of wealth, or is it because a lot of people in your space, they prefer going after wealthier people, but it sounds like you're kind of casting a wider net.
Yeah, we really try not to market to saying that we have a minimum. I do think that our investment approach, really, I think it for us to really take our, to utilize our investment approach, I think, I would say probably between $50,000 to at least $100,000 would really allow us to, really start implementing our investment strategies. But we really do not market a minimum because, if you start working with someone that's 25 or 30 and, they're just getting out of, just finishing up, their law degree or, becoming a doctor, it's more about that long-term play with them. And, that's really why I try not to market a minimum with as a firm.
Well, I'll tell you, that's pretty refreshing because a lot of wealth management firms, they don't want to even pay attention to people at that stage because, frankly, there's not a lot of money in it for the wealth management. But to make that kind of investment in your clients for that period of time is pretty different, I would think.
No, yeah, you're right. I mean, I do think we are unique in that aspect because I see it all the time. There's a lot of advisors right here in downtown Tampa that, they have a minimum of $500,000 or $1 million. And, I actually found over time that I think it puts off a lot of people, honestly, Lee. People come to us and say, "Oh, do you have a minimum?" And I'll say no. And they're like, "Oh, well, I was going to go talk with so and so, but they told me that they had a $500,000 minimum, and I didn't feel that I had those assets." But then, lo and behold, they had 2 to 3 times that amount of investable assets. So, again, you never know, people's experience. And again, I think, some people just don't like, hearing that they have to invest X amount of dollars to be able to, even talk with that person.
Yeah, I think I really applaud you doing what you're doing because I find it's a missed opportunity for a lot of wealth management firms because a lot of people who have wealth would want, like their kid, who may not have wealth today, have access to your expertise, but it's not even on their radar to make that kind of connection. And I think it's a mistake for a lot of these firms. They're missing out on a generation of people that could be using their services if they would just invest some energy into them.
100%. I think it keeps our clients stickier, from the fact that unfortunately, the one thing that we know that happens in life is death and taxes, right? Sadly, I think of it as an opportunity that we can actually build a relationship with their kids. So, when something does happen to the parents, that we've already built out that relationship, that we don't just see assets leaving, the firm just because, their parents, or passed away, sadly.
Yeah, and I think the stats back that up. I think that the vast majority of people their kids don't move to the parents' wealth management advisor. They find their own.
Correct. Yeah, no, absolutely. And again, I think, for us, we are, a much younger, registered investment advisory, firm. So again, I think for us, it's taking that opportunity that, we're not sitting here and saying, hey, we have a 5 or 10 year exit plan. Our hopes is, this business is going to be, 30, 40 years in the making. And, I think we can take that long-term, plan, even though, yes, if someone's just opening up a $20,000 or $50,000 account, I think it's the idea that this could be a very good client for us 10 or 15 years down the road. And yes, it's not as lucrative as, someone that brings in, millions of dollars of assets right away. But I think you need to also plan for the future as well.
So now, can you share a little bit about the scope of your services? Is it just kind of wealth management? Does it kind of go into taxes? Does it, are you the kind of the quarterback, the CFO of somebody's financial life?
Yeah, so here at Graham Capital Wealth Management, I think we really try to bring in a number of different services. So, we don't just, do, financial planning or investing for our clients. We have, accountants in-house. We have attorneys that are in-house. So, we can do everything from, planning, investing, their taxes, whether it's individual or business taxes, and also, really put together a true estate plan. So really, I think, we can kind of, as you mentioned, being facilitating as the quarterback of saying, okay, how do we create a holistic financial plan for this estate, and make sure that we're making, all the right, decisions when it comes to the holistic financial plans, whether it's just individual taxes, business taxes, investing retirement assets, creating that estate plan. And I think that is something that a number of our clients really appreciate, that they're not having to work with a number of different, companies, and having everyone in house really allows me to, specifically with the accountant, it really allows me to work in unison with them, so we can reach not only their short and long-term financial goals, but really try to make to reach those goals in the most tax efficient manner.
Yeah, I think that's better for the client to have that kind of Mayo Clinic or the Cleveland Clinic kind of opportunity where everybody's working together, everybody's seeing all the data together, and they can work together to come up with the optimal plan, rather than have siloed specialists that you're hoping are going to connect at some point so they can get on the same page.
No, yeah. I mean, a couple years back, we didn't have an accountant in house, and I would meet with our clients' accountants, at their office, or the accountants would come into our office, and we just thought it was time for us. I think we got to a size where we said, listen, we have a number of clients that would appreciate us, bringing someone in house, just so that we're all working in unison, because I don't even think the clients sometimes even realize how much, the accountant and I throughout the year. It's not just when, tax season comes around that I can provide them their consolidated 1099 or their 1099-R tax document. It's really a thoughtful, thought out plan throughout the year, saying, hey, for client so and so, how do we how is this investment going to affect their overall tax strategy for 2024.
Yeah, and a lot of times, obviously, your client isn't up to date with all the ever-changing rules when it comes to taxes. Like, is there any advice you can share when it comes to, maybe let's talk about the expiration of the tax Cuts and Jobs Act. Is there anything you can share that people can do today that maybe can save them some time and money tomorrow?
Yeah, I think, with the Tax Cuts and Jobs Act, so just kind of even taking a step back for the listeners, if they're not, aware, but the Tax Cuts and Jobs Act was initially implemented, going back to 2017. And, that legislation's actually, set to expire here, next year at the end of 2025. So, and this could, depending on what happens with Congress and what happens with this upcoming election, if they expire and we do not see, any sort of modification or extension on the Tax Cuts and Jobs Act, you will see, tax rates revert back to, 2016 levels. And, I think for our listeners on this, I don't know how much they realize how that could impact, their upcoming tax season when it comes to, 2026 and beyond. Because, just for instance, the Tax Cuts and Jobs Act, when it comes to individuals is that one, it decreased, the individual tax rates, for people. And two, it also affected, the standard deduction, for people married and filing single. And those standard deductions are actually going to move lower or back to the previous levels, which, right off the bat is going to impact their overall taxes.
Yeah, and this is something that if you have this information ahead of time, you can be proactive. But if you're going to wait and then all of a sudden it's sprung on you, you might be in for a surprise.
Yeah, I mean, I think that's unfortunately, I don't think enough people are keeping as close of an eye on, the Tax Cuts and Jobs Act as they probably should be. Especially with this election, I think both of the candidates kind of have different views on what their plans would be, with the Tax Cuts and Jobs Act sunsetting next year. And how they plan to, change one from, for not only individuals, but also for businesses, and how that will, for small businesses, how that would affect them.
Now, is there a story you can share? Don't name the name, obviously, but maybe explain the challenge that someone had before they started working with you and how you were able to help them either get peace of mind or get to a new level?
Yeah, I mean, I think for, a story that really always comes back, to me, that when people ask that question, is one that, unfortunately it was a very sad event that, I had recently met with a couple, down in our Sarasota office. So we have an office in Tampa and in Sarasota. And I met with a couple, and we were just, starting off, building out that relationship. And they were both retired. So we were really, trying to develop, their overall retirement plan and really trying to position them for the next 10, 15 years to be able to kind of live off of their assets, and continue to maintain, their current lifestyle. And then obviously we move forward with them as a client. And prior to, leaving the meeting, the client had mentioned, oh yeah, I have to go back into, I'm having back surgery in a week. And it was supposed to be a very minor surgery. But lo and behold, unfortunately, the individual ended up passing away. And, the wife, when we heard the news, just the first thing, it's wanting to be there for that person. Even though they barely knew us. We probably met once or twice before that, maybe an hour and a half, at each meeting. But, that's where we have, as your fiduciary, is really, we need to kind of step up and say, hey, this is what changes need to be made. Because I go back to Lee talking about, estate planning, we had already created a trust for them. Right. So, again, I think that's where we were able to, the attorney and I were able to sit down with the wife and really, walk her through all the necessary steps. And, by the time we were done meeting with this client after 3-4 hours, because it was a very grieving event, a lot of tears were shed during this meeting. So after 3 or 4 hours, when we were, kind of leaving the meeting, she comes up and just kind of hugs us both and just says, I really don't know, I think the last thing, the last final decision that my husband made was to move forward with you guys. And if we didn't make that decision, I really don't know what I would be doing right now. So, again, I think that's always a story that always, reminds myself of the importance of not just, making clients monies, but just trying to be there for them. And just trying to kind of be a resource when these sort of events happen.
Now, is there a piece of advice you could share for someone listening right now? Maybe it's a way, because I don't want to get obviously into any financial advice, but is there a way that maybe you can tell that the current financial advisor, the way you're getting financial advice, because I would imagine there's a bunch of people that are doing it themselves. What's kind of a signal that, hey, maybe it's time that either you got to switch or maybe have a conversation with, an expert?
Yeah, I mean, I think, going back to, what we were just talking about briefly with the Tax Cuts and Jobs Act, I think it's, I think a lot of people, do try to, take the onus on themselves to, to make their own investments, their own investment decisions. And, frankly, a lot of people, I think, do a very good job, at the investing part. But, from a tax, strategy, standpoint, unfortunately, I think that's where a lot of people, don't do as good of a job. Right. So for instance, for our high income earners, they'll say, well, I can't make Roth contributions. And that's true, but there are ways, right? There are ways that, actually you could still make contributions to a Roth, even if you're above the income threshold. There's something called the backdoor Roth conversion, where basically you put pre-tax money, you put after-tax money into an IRA, and then the very next day you convert that after-tax money into a Roth. And that's a way for you to get money into a Roth and continue to make contributions every single year, even though you're above the income, even though you're above the income threshold. So again, I think there are loopholes in our tax legislation that I think, could benefit people long term when it comes to their overall financial plan.
And then regarding that, it's that knowing about any changes in, where the tax levels are would be good to know, because you may want to make a move sooner than later when it comes to a conversion.
No, yeah. I mean, especially with this expiration of the Tax Cuts and Jobs Act at the end of next year, I think there's just that big question mark out there of saying, okay, what's going to happen with tax rates? I know, a lot with the corporations, they talk about, possibly increasing that from 21% up to 28%. But, if individual taxes are going to go up from, 37% up to 39.6% on the top tax rate, it might behoove certain individuals of saying, hey, individual tax rates are going to be increasing in the future. Maybe we take advantage of these low, the historically low tax rates right now and start converting or putting in a Roth conversion, strategy, for a multi-year strategy to try to mitigate taxes. Because I think the one thing, Lee, whether or not taxes go up at the end of next year or 5 years or 10 years from now, we're at a point with our national debt, sitting right around, $35 trillion. Maybe the next president doesn't change the tax codes all that much, but I feel pretty strongly that in the next 10 years, we're going to have to do something with taxes, and most likely it's going to be increasing them to obviously, start paying down some of our national debt.
Well, if somebody wants to learn more, have a more substantive conversation with you or somebody on the team, is there a website? Is there a way to connect?
Yeah, I think the best way, the website that we have is grahamcapitalwealth.com, or you can call one of our local offices, our Tampa or Sarasota office number. You can just call us at 813-645-1233.
And Graham Capital Wealth is GRAHAMCAPITAL wealth.com. Michael, thank you so much for sharing your story today. You're doing such important work, and we appreciate you.
Thank you, Lee. Thank you for having me on today.
All right, this is Lee Cantor. We'll see you all next time on Tampa Business Radio.